Hello, today I want to talk about inflation again, given the fact that we're seeing such big numbers here in the United States. This is a multi-part series. You can see the other videos in this series by following these links right here. Today, we're going to talk about the key drivers, the big drivers of inflation here in the United States. Now, as you know, anywhere and everywhere you look, you're seeing articles, news headlines about inflation. The IMF is talking about it. The Fed is talking about it. We're seeing 13-year highs in terms of inflation rates. Now, it turns out when it comes to inflation here in the United States, there's only a few key places where we're seeing that inflation. It's very concentrated in a few key items in that basket of goods. Let's take a look at those. First is going to be transportation services. This is your buses. This is your cruise lines. This is your taxis, your subways. But most of it is being driven by increases in ticket prices for airlines. If we look at the chart, this is over the past 18 months, we see a period here where we had negative, year over year inflation in this basket of goods, only to be followed here in the spring. It shoots up double-digit inflation year over year in transportation services. It's flatlined a little bit here. Time will tell what it looks like going forward. Now, another place we're seeing it is used cars, right? So people are looking to buy used cars, and these are shooting up. Now let's look at the chart. We see first 6 months here where it's flat, maybe a number there where it's positive, but a couple, and then about a bunch of really small negative year-over-year inflations, only to see that jump up for a 6-month period. We saw double-digit inflation in the used car market, and now it's just shot up over 45% year-over-year inflation in the used car market. This is being driven by the chip shortage. So people want to buy cars, but their new cars are not being actually finished and completed because they're waiting on a chip. So we have these nearly completed new cars sitting there that can't be sold until these chips get here. So the only car you can buy is used, driving demand up tremendously for used cars. Of course, driving up the price. I have a couple of videos out there where I talk about this chip shortage in much more detail. You can watch those videos by following these two links right here. Finally, we're going to talk about motor fuel. If we go quickly to the chart, we're going to see a period here we saw pretty significant negative year-over-year inflation numbers, only to see this shoot up dramatically. Now, unlike the other two categories in the basket here, this shift up actually occurred, a few months earlier. Instead of in the spring, it was happening kind of in the winter time there. And we're seeing, of course, here kind of those high 50% inflation numbers year over year here. Time will tell how this goes. If it drops much further from here, we'll just have to wait and see. Now, if you look at the rest of the goods in the baskets that comprise inflation, what we're seeing is roughly 2% inflation, and that's about it. And of course, that is the Fed's target, but the other three are just driving that number up to these 4+ digit numbers we're seeing there. Of course, the Fed is very concerned. They have said that they're actually expecting now higher and more persistent inflations than we were originally expecting at the beginning of the recovery. Fed also talked about their transitory, language, meaning there that the price increases that we're seeing, that increase is transitory, but it doesn't mean it's going to then fall. It's going to increase and stay there, right? So if that is true, if the Fed's right there, if prices go up and then stay there, we're still going to see these high, well above 2% inflation numbers for the next, 6 to 9 months, because the comps going back a year ago, it's just going to take a while for those to fall off there. So even if prices stay flat, we're still going to see these high percent increases in inflation. When it comes to the Fed, I think what I'm seeing from my perspective is a little bit of like, they don't know what's going on here. They're not going to say that, but I'm seeing that in the market. It sounds like they just are a little bit confused, don't know what to do. How can we, keep interest rates too low for too long? If we're seeing these inflation numbers, of course, time is going to tell. I will, of course, point out these videos here where I'm a little bit critical of the Fed, and I think you should at least question what they're saying, and that's what those videos are all about. That's it for today. Happy trading out there. Thank you so much. As always, please subscribe. Please give it a like. I'm Brian Kozlowski.